Let me show you something, guys. This will blow your mind. Check this out. So you got your break of structure here. So in your own definition, this is a downtrend. You got more break of structure here. By the way, this is a 1 hour time frame. But listen to what I'm about to show you. This will blow your mind. So we got that break of structure here going down. So everything you're doing is looking for sell opportunities. But then check this out. Break of structure to the upside. The tide has changed. The trend has changed. So we're going up. So all of this is one clear move to the upside. So you put your pending order right there. Let me get a box to you put your pending order right there, which is how we all cut break of structure, potentially buy for the guys who trade inducement. This is all set up for a sell. So this is your inducement of the zone. You can, if you wanted to be a bit careful, well, if you wanted to just guarantee that you don't miss the move, you put your box through there, set your pending order right there, stop loss right there, and then you're looking to potentially target up there. This is a valid trade if you look at it. And also, we're looking at this right here is the S&P 500. So this is a naturally appreciating asset. It goes up, it trends higher. But what happened there? Price comes and just dumps you out. So the question is, what happened here? And why did this structure fail? Which is a big question everybody is always worried about. Everybody wants answers to questions like this. And I am happy to be able to be the guy to shed some light on this. So we're talking about market structure. A lot goes into looking at market structure. Your typical higher highs and higher lows can be very confusing, but I'll try my best in this video to make it as simple and we'll try and break it down to the best of my capability. So let us clear out everything here and I can explain why this particular setup failed. Uh, the video topic for today is just we're talking about market structure. I'm trying to break down the basic components of market structure for us to be able to understand what market structure is. So this is market structure from a swing trader's perspective. I think even on the lower time frame, it's about the same thing, but it's the same thing as well. But the market moves in three ways. It moves higher highs, higher lows, and it moves makes higher highs and higher lows, or it makes lower lows and lower highs, or it just trends. Just for a visual way of looking at stuff, let me just put this out there, just bring this down a bit. Have like a so we have the simple higher highs, higher lows, higher highs, higher lows, higher highs, and higher low. So this is a typical market structure. Break of structure right there. Break of a swing high, break of a swing high, and then you have the lower low situation. This is a selling market. This is where it goes lower, takes out lower, it comes, takes out lower. This is a swing. This is a typical. This is a typical direction. Lower lows, lower highs, lower lows. Where market takes out the swing lows and preserve the swing highs. Takes out the swing lows. Let me put that, highlight that for you. We take out the swing lows and then we preserve the swing highs. We take out the swing lows and then we preserve the swing highs right there. So typical. So again, I wish it was as simple as this when you look into the charts. But then we have the third way where it's just zero direction, where we're going that way, 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 going that way. Sorry, I'm going to move this out, move it out of the way. Excuse me. So we have this one where we just zero direction. Now this is where the problem is. This is where you want to not be able to just take any action because we're not taking out the swing highs, we're not taking out the swing lows. We're respecting swing highs and we're respecting swing lows. We're respecting swing highs and respecting swing lows. Sorry, on swing highs. We're all respecting it. There's nobody's taking there's no direction being taken. So obviously swing highs and swing lows and a move like this is we're looking at it. High highs being taken out, lows being preserved. Higher highs being taken out, lows being preserved. The buyers are in control. So this is an uptrend. This is a downtrend. So you need to keep that in mind while we go through the rest of this video. This is the only three ways the market moves out. I'll just quickly repeat that again. We have higher highs, higher lows, situations where the swing highs, this is a swing high, it's been taken out by this swing high. So is direction has been established. Swing lows are being respected. Swing lows are being respected. Lower lows are being respected. So the structure right here is a typical um bullish trend. This here, bearish trend. Lower lows, the lows are being taken out. The lows are being taken out. This is a lower than this is a seller's market. This is a buyer's market. This is no direction, indecision. It's notwithstanding, you can make some kind of money here, depending on what strategy you're working with. You can make some kind of money here. But for me, I try my best to avoid situations like this because they just destroy me. So with that established, three ways that the market goes. Let's move on to the next thing. Let's take this out and let's continue. Oh man, let's take all of this out. All of this. So while I'm doing this, it's important to understand that the BOS just simply means like the market is showing intentions to move on to move higher or move lower from lower to potentially search for lower prices and potentially look for discover prices beyond what it is currently establishing or beyond the range that it has already established. So typically you want to be very because break of structure can be a bit confusing. You have to be sure that the right so you're looking at the right swing high. Just like the previous example I showed you on that everything lined up, but somehow it failed. And it failed because something wrong happened. Let's bring that back again. Let's go to the 1 hour time frame to show you that same setup. It's still there. You can see where you would have put your pending order long right there, the buy. And then the price just ran through your stop loss. The price just ran through your stop. So we simply go to the daily time frame just to understand where we are. We understand now that this right here is a bullish trend because we broke structure again. Let me just define structure for you to the best way I can so I'm on a different platform now just to give you an example of what I'm talking about. So we're just going to go ahead and use um the playback tool. I know what now. Let's take it to the H4 for just a better clarity. So we're just going to use the playback tool and just go into a random. So right there, we ask ourselves one question: what are we dealing with? We've come out to the market. Unfortunately, I can't go to the lower time frames for this one. So this is like a one time frame. So do a playback on one time frame. So we're here, we're looking at it, we're asking ourselves one question: where are we? What structure have we broken? You look, but like this is the highest point. This was the highest point at some point in the range of the market. I use that. This was the highest point at some point. The market did never close above this at some point. And if we go back a little bit, we can see, just for clarity, where was the swing points. This was the swing point, the highest point the price ever got into. Remember, break of structure, breaking of swing points. What was the low that led to this break of structure? You ask yourself that question. Well, right there. That is the low that led to the break of structure. You ask yourself the same question. What led to this? What low led to this point? There we go. We can see one thing where, and if you remember what I said, swing highs will be taken out, swing lows will be preserved, swing highs will be taken out. So all the lows are being respected, right? Good. So what we're doing, what we typically would do is just like you want to buy, sell at buy at a discounted price. So you're waiting for some kind of pullback into order block, breaker block, order block, whatever it is. You put your pending order. Where's our pending order? A bullish pending order somewhere there. And then you try to secure the lows, you know what it is, and typically look for the highs. As simple as it is, you can easily do it that way without, especially for a heavily trended market. Most of the time, is not very, this doesn't work in anywhere in a ranging market. We'll go ahead and do a playback, and this is just playing it back to see what happens, and then we get tagged in. Simple, and we get stopped out. So what did we learn from getting stopped out? The swing low has been taken out, which is a signal that, wait a minute, this the direction of the trend of the market might be changing. So we take this out. This normal. This is normal. There is no indication that it's going to fail. Most of the time, it just fails because the market is getting ready to turn around. So you look at it, swing high. Again, you want to always consider the wicks as the distance. Swing high. This is what led to that. So what do we do? You look for simply you want to buy at discount. Where is your set order block breaker, your order block or the zones you want to look at to buy? This is just simple. There's a lot more that goes into this, but this is just for the sake of market. It's a typical break of structure, market structure lesson, market structure information that I'm trying to pass on. So you want to get your short tool and put it there. This is where it is, and you're trying to target the last place, the potential swing low. So this is potentially going to be our swing low. Because if we're right that the direction of the market has changed, the price should come and take this out or attempt to take it out. So we just play back. Then we just watch. And then we have a break of structure already. We have price coming here to take it low. It didn't come back to where we wanted it to come back to. However, again, that's what I'm saying. There's just more that goes into this. Then we have more. That's more breaks. Sorry. I just used the line tool to do this. We got that one there, and then we have a second one right there. Swing lows are being taken out, and the swing highs are being protected. Where is our swing high? What led to this? This is what led to this. Okay, so we try and keep it right there again, and then we play back. Heavily trending. Bear in mind that the swing high has not been swing low has not been taken out yet. So if it hasn't been taken out yet, we're still in the range. Come on, we're still in the range. So this has not been. This is our swing high. This is our swing low. Nothing has happened. So in this moment, we're still in a silent environment. You do not want to do anything but just simply sit down and wait. I'm not saying there's a lot more that goes into wanting to enter, maybe a lower time frame confirmation, all of that. But just for the sake of this info, what the sake of market structure, I'm just trying to show you what it is all about. Swing highs and swing lows. It's not complicated. Okay, so we still haven't taken out the swing highs and swing lows are still very much intact. And then guess what? We've taken it out. Price never came back to tap us in, and we've taken it out. So obviously, like I would be a bit more proactive in situations like this. I wouldn't just allow good setups like this, but this is for the purpose of this video. I wouldn't just allow good setups like this to come off because again, simple direction has changed, and we're looking to create the direction. So we've been protecting swing highs and swing lows just for the sake of this video. And then after, then we have this as our swing high and this as our swing low. All right, so typically you want to say, where is your other block? Your other block is somewhere around there. You have your stops at around that point, and then you try and see if it tags you in. Does it tag you in or doesn't tag you in? Find out. And then swing highs again, taking out. What do you see? Swing lows being respected. Take that out. Swing lows being respected. That's what you want to see. You look at that, and then again we get run over. We get run over. Sorry, this would have been where my stop loss would be. There we go. And what do we have here? The swing guy has been taken out. Direction looks like it's going to change. What led to it? This is the low that led to this high. So typically, what do we do? The direction has changed. Again, don't worry about not getting tagged in all of these trades. The fact is that we call the direction right. You want to be able to call the direction right. If you fumble the direction, that's the you might as well not bother doing anything. But the direction has to be called right. So back to the little experiment. We're back. We're playing back. The direction has changed. We're not looking like we're coming back. So this has become something of a swing high. This is a swing point. So you'd like for us to maybe pull back into a region like this to potentially take a trade? Who knows? Somewhere like that. I would take this with some level of confirmation. I would take it with some level of confirmation. Something like that. If it chooses to come back. So again, bear in mind that now we've also broken that swing, that point has been broken. So we have this low, and then we have that high being taken out. But I wouldn't take this because it's just again it's for a different video. But for the sake of just market structure, this is what I'm trying to explain to you right now. So key thing to just take away, you can see we were never taking out the higher highs, higher lows were being preserved, and lower lows were being taken out. Lower lows were being taken out, lower low, and then we started taking out higher highs. Guess what? Higher lows that are getting preserved. Higher lows that are getting respected. Right there. More of them start getting respected. We can keep playing it back. You can see that the trend has absolutely changed. You know, and what do we know there? They're being respected. Sorry. Those are all being respected. The highs are being taken out. Okay, so this is basically how it goes. So if you're able to, this is like the foundation of this is the language the market speaks. If you're able to understand this and you're able to get past being able to understand where the swings point is and just being able to be patient enough, which is the most important thing, to be patient enough to wait for these things to happen. I think a lot of the mistakes and a lot of errors it's like 50% of your mistake is going to be. I know this is what this has allowed me to this is this was the aha moment for me, just being able to understand swing points and being able to if you don't understand the idea of breakup structures, if you're doing all the ICT, SMC, inducement, it's pointless. It's absolutely pointless. You have to be able to understand simple market structure, break of structure, pullback, break of structure, pullback, reversals. If you're able to understand the idea of reversals, this was a reversal. Went from higher, lower lows into higher highs. This is a reversal. All of this, once this happened, we went again, something like this. We went from higher highs all the way here into lower highs in this region right there, into higher highs right there. So if you're able to understand this, you're able to understand reversals and you're able to understand continuations. So this is just the basics of how the market can. This is the language of the market, and this is how it goes. So I hope I was able to make sense. If I'm not able to make sense, I'm sure in the future I'll still make more videos about something like this. But I think a lot of newbies, a lot of new beginner traders need to understand this to just be able to make some kind of progress in this industry. So thank you for watching, and hopefully you like, subscribe, and just I'll just do more videos, more education videos, and I'll just try my best to be able to put up my great ideas I'm looking at. I'm a swing trader, so most of the time I hold a trade for a few days. If I'm lucky, a few hours, or maybe a minimum of 8 to 10 hours. That's the end. That's the minimum I'll hold a trade, and the highest I hold a trade is 7 days, 8 days, 11 days. That's the longest I've held a trade. So it's a real patient process, and most of the time you have to wait a week, 2 weeks, 3 weeks for something to properly set up. So I look at a lot of pairs, and I just kind of have the ones that look like they're looking like they will look like something in the week. I focus on a few of those. So if you want to see more of my face and maybe have managed to pass on some knowledge to you, please like, share, and subscribe. Peace.